Hi guys, so let's now take a look at our second lesson on the statement of financial position or the balance sheet. As we saw last time, the statement of financial position really helps us to understand what a business owns, its assets, what it owes, its liabilities, together with the actual financial position of the business. Okay, so let's look at some of the other key information that this statement of financial position is really useful in actually telling us. So it helps to illustrate the state of the business at a particular moment in time. So it enables you to understand exactly what the business is perhaps investing its money in and where its future direction is likely to be. We'll have a look at a bit more on this later. Okay, so it highlights only financial information though. That means it doesn't tell you any qualitative information. It's purely quantitative, of course. It tells us nothing about the quality of management, the level of motivation of staff and so on. Okay, now when it comes to interpreting the actual statement of financial position, then it can be used to interpret the short and long-term position of or strategy of the business. So if the business is deliberately really investing heavily in its fixed assets, well, that will tell you that it's investing in its long-term productive capacity really, and hopes to be able to increase output in the future. Okay, in the short term, it illustrates the current assets and current liabilities. So these are assets which will be used within a year. These are liabilities or debts that need to be repaid within a year. Okay, meanwhile, it also highlights the long-term position, the fixed assets, the non-current liabilities. Okay, so that is the longer-term borrowing, the capital and reserves that have actually been put into investing in this business and really developing the size and scale of it. Okay, now when it comes to the actual fixed assets and capital, you must remember the fixed assets are things like buildings, machinery, land. They help to generate income, either directly or indirectly. So for instance, a building will of course enable you to indirectly produce a level of output, but it may be the machinery that directly produces that output level. Okay, now increasing, if you see fixed assets increasing on a statement of financial position, this is really telling you that the business wants to expand its potential output level because that will enable it to generate more income in the future. Okay, now you've got to also think about the borrowing or the non-current liabilities that may be used. That is long-term borrowing that is actually used to finance those fixed asset purchases. So borrowing may mean the business is vulnerable to changes in the interest rate. That is the cost of borrowing, of course. So if the cost of borrowing rises and a given business has a lot of external borrowing through mortgages, then of course they're likely to be more susceptible to rising interest payments there. Okay, now it also highlights and shows us the reserves for that given business, and these are simply funds that are set aside to actually conduct purchases into other fixed assets or to actually reward shareholders via dividend payments as they're known. Okay, so we can see that the statement of financial position is very detailed, has a lot of numerical information, it can be very useful, but we've got to remember that it's only quantitative. It doesn't tell us about how good the management of the business is and other qualitative factors, as we said, but nevertheless very, very useful tool in interpreting the likely direction of a business. Great stuff, guys. We've got some more coming up on the statement of financial position. Stick with us. See you soon.